Starbucks is often described as a bank with a coffee business because consumers store more than $1.7 billion in their Starbucks wallet, which they can redeem for coffee at a later point in time. But how does a wallet actually work? And why is a Starbucks wallet more of a wallet 1.0, whereas other merchants go for a wallet 2.0? In this episode, I speak with Arda Cagaptay about wallets and why merchants are currently adopting wallet solutions. Arda has spent more than 15 years in fintech, and until earlier this year, Arda was responsible for the wallet initiatives at food delivery platform Delivery Hero. He left Delivery Hero to start his own business where he enables merchants to offer wallet products. My name is Lars Markol, and this is the Embedded Finance Review podcast. Every 2 weeks, I'm interviewing the builders and shapers of embedded finance. And now let's dive in. Hey Arda, welcome to the podcast. How are you doing today, and in what part of the world are you located right now?
So, all's good. Thank you for the invitation, first of all, Lars. And I'm now located in sunny Berlin.
Nice. We just spoke about the pre-chat. This is for the last podcast episode this year. I'm going to record from India, where I'm currently working remotely a little bit. It's very sunny over here. I'm looking forward to a little bit lesser sun in Berlin, so looking forward to that. Arda, you with your background already spent quite a bit of time in the financial service world, fintech. I think since a couple of years now, you've specifically been focusing on the topic of wallets. So maybe the nickname Mr. Wallet is already appropriate. So we're going to talk a lot about wallets and specifically use case wallets used by merchants to offer wallets to their customers, to the consumers. And when I say these things, I would assume like most of the listeners who've spent a bit of time in fintech in this world immediately think about Starbucks. I think there's always this story about like how customers, I think specifically in the US, have stored more than $1.7 billion with Starbucks. So basically giving them money before redeeming them for coffee. 1.7 billion is obviously a massive number, giving Starbucks a lot of leverage. Maybe from your point of view, maybe you can say a bit more about the Starbucks use case, what you think like fascinating about that, and maybe also potentially how do you think Starbucks was able to achieve such a high volume of stored funds?
Sure. Let me explain. So the first thing is I can tell, Lars, is it's great that we have Starbucks in our life for two reasons for me. One, coffee, obviously, and for most of the people globally, not only in the US. And second reason, that they achieved really great thing with this wallet, that we have an amazing example. If I'm trying to pitch the idea to any merchant or anyone in the industry or out of industry, well, think about Starbucks wallet. It's a better version of this one. And they're like, oh, I get it. Because it's easy. Most of the people use it. And even when I was working in Turkey, I used to use their Starbucks wallet. And there has been lots of like an efficiency that I have seen back in the time there. So to just jump to your main question, how they achieved and what they are doing, I think the main thing is that like coffee creates an addiction, definitely. And Starbucks as a brand creates like a double dip addiction to people. And when there's an addiction, there's an always addiction to the wallet and addiction to the loyalty. That's why the core thing that they created here is something that helps to users to be able to consume and to create some kind of loyalty towards the brand. And one of the reasons was, I think, their product. And of course, their marketing approach and how they did the things, right? And it was mainly like a simple, I'm always calling like Wallet 2.0 my own concept of like new wallet. They are not even in that level. They are only doing like first level. It's more of like a layer thing that they are doing. They are providing rewards, and after topping up some amounts, you can get coffee back. And if you drink more, you will get like free coffee at the end with your stars. And people are inclined to just keep up funds inside because it's a daily habit. From maybe to just make it like more clear with the audience, it's more of like a prepaid subway card, like Starbucks wallet thing, and you top it up. And as in subway, you are just taking rides, right? You are taking your like daily caffeine rides every day, and that's why it's like a similar, because there's more of like a need always in this wallets to push users or push customers to keep funds. And if you are using daily, maybe twice a day, or even with your customers, clients, or like friends, if you're just inviting to the coffee 4 or 5 times, it definitely makes sense to keep funds there because you are taking value.
So the way like the typical customer journey is, I go maybe in the US, I go regularly to Starbucks to buy my coffee, maybe not multiple times per day, but let's say even like once a day in the morning on my way to work, I buy coffee. So obviously I might be incentivized by Starbucks. Instead of paying $5 per day for my coffee, just put $50 in the wallet, and then I can redeem it over there. And I think what Starbucks have seen as well, like what Starbucks does quite well, adding additional benefits for these things, that benefits that hardly cost them anything. I think this what I read about was like a birthday voucher when it's your birthday, and free internet, free Wi-Fi in the stores, like stuff that doesn't really cost them anything, but it kind of puts another incentives for people to sign up for the service and do these kind of things. And I also remember that was not specifically for Starbucks, but I think there's another, we spoke about that as well a couple of weeks ago, another coffee chain in the US who also implemented a similar system, and the numbers, they're really specific, the numbers is like pretty insane, so to say, to see what the impact is for the coffee chain. Is like the customers are coming back more often, because in a way, as you said, like coffee is an addiction. Plus on top of it, coffee is more or less like same. And if you have with one coffee chain already $50 stored, you're not going to go to the other one because you spent that money. Like technically you spent that money already. Why not going there, right? And of course, for the store, on the other hand, they might be saving also quite a bit on transaction cost as well, right? Because it's just like one transaction for $50 whereas maybe 10 or 20 smaller transactions. So, I mean, it might be transaction cost, but also potentially faster checkout. But I do wonder, and this is like the kind of touching on what you said before. I mean, I think you said about the Starbucks thing, it's a wallet, but it's not a wallet like 2.0, it's a wallet 1.0, probably calling it more of a prepay service. Maybe you can just explain a little bit more what you meant exactly with that. Like, what is wallet 1.0, 2.0 in your thinking?
So 1.0 is like a really core prepaid, like a balance that you keep somewhere, and to just use it in the merchant in a closed manner. I mean, somehow like I call it like spend here and earn here. That's it. So loyalty is like limited, and engagement is always limited. And the thing that you can take out as a value is always limited with Wallet One. And that's why most of the merchants are now a bit hesitant in creating their own things, but still there are lots of value, but they don't want to see it, or they don't want to do it, or in most of the cases they feel, from the industry knowledge that I have, from the feedback that I get from customers, they see it's like a really complicated thing, and they don't want to just go into the business of the wallet thing. But when it comes to Wallet 2.0, so it's a great question. Thanks for that one. So to clarify it, it's more of like an additional engine of loyalty, of engine of like capabilities that you can take more from the business, and you can bring more value to the customer and to your business. So also like embedding the financial applications, like giving them rewards, providing them buy now pay later solutions, giving them giftable cards, like additional service, additional use cases that you can create to the customer to convince them to keep some additional funds is something that comes with Wallet 2.0. Another part can easily create, but for this one, they need a proper data analysis and data layers so that they can use this one. This requires additional compartment. But in the Wallet 1.0, there was no need for this kind of stuff that much. That's why it was missing. And last point, of course, we must mention AI here, right? Because it's now our trend. Because with AI capabilities, customers can be guided better for better purchase decisions. I'm not only talking about Starbucks or coffee or donuts or something like usual or daily. Even when you're buying electric equipment, for example, or something from a subscription, right? Still, there are lots of cases that can be created, and customer needs to be guided. And for this guidance, Wallet 2.0, I'm saying, is having some capabilities to guide the customer, to guide the merchant, so that there can be more kind of valuation.
Yeah. So in a way, when you compare Wallet 1.0 to Wallet 2.0, maybe, I mean, obviously it makes sense to use it terminology, but in a way, it's not even correct maybe to describe the Starbucks case as a wallet as such, right? Because in a way, it's not maybe I mean, in financial services, we think about a wallet, something closer maybe to a bank account. But in a way, the wallet at Starbucks is just more like a prepay services, as you described. I also always use the prepay mechanism. But in a way, it's not, I mean, I'm not sure. I don't think that Miles or maybe Starbucks in that case need to keep the funds separately and need a license for that. This is basically a prepayment for the services, and you can only redeem it against Starbucks services or Miles services. And I think it's pretty more closer to a voucher, right? It's like even like an Apple or Google credit you can buy and then you can redeem it. I mean, basically any business can offer like vouchers, right? So I'm quite curious to understand, like, I mean, you described what is possible with Wallet 2.0, but maybe like a little bit more of like practical examples, like you mentioned buy now, pay later and some of these things. But what does exactly mean for the customer? What can they exactly do with a Wallet 2.0? What's not possible with a Wallet 1.0?
So from customer perspective, the main thing is I would say use cases, either financial or non-financial use cases. Assume that you have funds in your, like you mentioned, like Miles wallet, or you mentioned like Starbucks wallet.
Yeah.
With your funds, you would be able to buy other stuff that normally Starbucks doesn't offer, but
Mm-hmm.
legally it's possible, like digital, like gift cards, for example, of the other brands, or
Mm-hmm.
like the group brands, right? It doesn't
Mm-hmm.
always needs to be like inside Starbucks. When their mother brand is like providing different merchants, maybe there can be kind of like interoperability so that you can redeem there. For non-financial use cases, like I don't know, like maybe eSIMs, right?
Mm-hmm.
And game credits, subscriptions, right? For
Yeah.
other brands as well. And for financial ones, which is your really like your core business, like on the embedded finance side, so you can provide with providers, of course, buy now pay later solutions. You can issue cards with the card schemes or like issuers. You can issue open loop payment
Mm-hmm.
capabilities inside the
Mm-hmm.
wallet, so that
Mm-hmm.
users can gain more. For example, maybe you are not buying coffee with buy now pay later, but for another brand or like another product
Yeah.
that the merchant is providing, they can provide buy now pay later solution inside the wallet, and customers can rent their car and pay a month later.
Mm-hmm.
This is something that they would love to do it.
Yeah. Okay.
When the amount is higher, the need for like this kind of buy now pay later is like going high, definitely for lending. And also investment tools like cryptocurrency, a lot can be
Mm.
done. I'm not saying that merchant will do, and the question is like, what's the regulation? Of course, there's a regulation, but there are lots of providers which are licensed can really provide the services to the merchants inside their ecosystem.
And in a way, I'm now like thinking about the merchant perspective. I guess you could argue that for maybe even for a like specifically for a brand like Starbucks, maybe for them, because they have achieved it already, most importantly, the wallet one is perhaps like preferred by them than wallet two, because in a way, the wallet one is obviously at the benefit of like you can only redeem your funds for Starbucks services. And that means Starbucks can immediately use the funds and do anything with that, right? I'm guessing right
Mm-hmm.
now, especially in kind of come to that also a little later bit of point of time, like what kind of merchants do you think are like really relevant for such like wallet products? But I would assume, taking out of like the coffee chain example, and again, coffee chains, there are, I don't know, a couple of them per country which have like really relevant size. Smaller ones might have make it a lot harder, or other merchant might make it a lot harder to convince the customers to put money into this wallet, because what are going to do with it, right? When do I come back to this breakfast place to add on another coffee or a breakfast, right? But then I guess the Wallet 2.0 features come in, where you can say, well, your money is not like gone, like you can only use it for our services, but there's so much more you can do with these services. Is that an angle you're seeing, or what is the incentive for a merchant?
Starbucks is another example, and they achieve something. Maybe they would not want to just get on the train of like Wallet 2.0 because they are taking advantage of those funds. You mentioned like
Mm,
1.7 billion
mm,
dollars of like funds sitting. It's like a bank and zero credit cash flow
yeah,
for the
yeah, yeah.
company. But for others, I'm thinking of this one. Still for Starbucks, I can still argue with my counter arguments that they are losing still some additional value that they can get
Mm-hmm,
more from this one, from this funds from their customer. But to specifically focus on to like smaller ones, to the other merchants, from value perspective, there are lots of value for the merchants. I mean,
mm-hmm,
like one is like, I mean, in the version one as well. For example, refund to wallets, Lars, like in Amazon or like Alipay or AliExpress, if you are buying something, they're always, and
mm,
if you're asking for a refund for some reason, they're always asking, oh, do you want to just take it to your Amazon balance? It's a
yeah,
wallet
yeah,
as well, and you are
yeah.
taking it to your wallet. Two good things is that you are taking your funds back real time, because
Mm,
when you're paying with cards and if you want to just ask your refund to your card, sometimes it takes 3 days, 5 days. In some cases, I heard like 15 days for
mm-hmm,
customer to just get from the card scheme side, and you're not able to use your fund, especially in the areas in the merchants that customer needs a quick replacement.
yeah.
But when you are providing real time, the customers, if they don't have enough funds, for example, in their accounts, they're able to reorder quickly, and it increases the replacement
Mm-hmm,
ratio quickly. That's what I've seen in my experiences in different countries as well. It's one value. Also, when you have funds sitting on the balance, as refund is there, you are
mm,
inclined to come there to buy and to purchase more, just because you are thinking, oh, I have like $10 there, and maybe I can have five, and I can get $15 of like product instead of like
mm-hmm,
12 or like 10.
mm-hmm.
right? And this increase like incrementally like the gross like merchandise volume, like the volume of the company is doing. Is one thing. And another thing is that like with cashbacks and other capabilities, you can provide the cashbacks to the customer directly from your funds or from your partners to just ensure that this amounts will be again used directly in your ecosystem to increase the volume. These are the core initial values of the merchant wallet 1.0. Some companies are using it. And to go further with additional use cases, merchants can make like additional revenue from the other services that they sell, for example, like really like digital goods that they sell to their customer. They can make additional revenue from this one. And this would be more additional revenue stream that they have never thought of. Like, for example, you are selling an eSIM or gift card of another merchant, right, in your ecosystem, and you're making 10% from the business. And this is something that also at the same time you are convincing customer to keep funds. Why I should keep funds if I'm only buying a coffee, as an example, right? No, you can buy transportation cards, you can buy this, you can buy everything because of more of like things are turning to be like a super app thing, and
I was thinking about
bringing convenience.
Maybe not super app, but like super wallet, so to say. You can
exactly.
But then, I mean, you spend a lot of time, of course, thinking about these things. Like, how do you envision this to look like, I don't know, 10, 15, 20 years from now? Like, we walk together in 10, 20 years in Berlin, to the streets of Berlin. Will then, like, every merchant we see offer a wallet? And will I be able to get an eSIM and the other products you mentioned, like from every merchant? Is that how you envision it, or what do you predict?
How I envision is like there will be more of like a merchants coverage. I mean, not merchant coverage, but from merchant side, there will be more kind of like solutions on the merchant side from awareness and visibility side. Because the thing is, it's more of like a snowball effect. If someone is doing in your industry and they're somehow like showing some kind of success, then as humans, we are like really inclined to copy the things. So when someone is doing buy now pay later with their solutions, as we have seen, everyone is doing now buy now pay later is a niche thing, and because like there's a value, this will bring the snowball effect. And in 5 or 10 years time, definitely we will see more merchant wallets. And as by time passes, especially like when they see the value, they will be inclined to do even more. I have been working on the merchant payment area for quite a long while in one of the biggest acquirer in Europe back in the time. And the merchants are, when they see the value, they're inclined to make investments. When they start to get back from their return, get return from their investment, even they are just coming with like really crazy, like really amazing ideas how they can do even better. And payment industry develops accordingly, especially on the merchant side for the acquirers for them. That's why this will definitely come. And the thing is that there's a big cost for the current card schemes or like current payment schemes that they need to pay. On top of this one, to increase loyalty or engagement, they need to pay additional fees for marketing, right? And when you think of this one, there's like a cost. But what wallet offers are like, we are somehow, I can explain in a deeper level, we are decreasing the cost of payment when we are having wallets. Plus, we are bringing engagement. We are decreasing the cost of customer acquisition or like loyalty at the same time. With your payment cost, to be honest, you are able to create additional engagement instead of like giving the money always to the card schemes or like to the payment providers always. You are keeping it internally. You are sharing it within your ecosystem with your customers, and you're creating the value. That's the thing. I was telling, like when I was launching, I was sharing for the first time my conceptual idea of like merchant wallet 2.0 in MP this year. I gave the same example. It's like merchants are leaving money on the table since a long while, and they started to notice this one, and that's why I'm 100% sure that this will grow like to a level that maybe we cannot imagine from today.
Yeah. And what would you say, what merchant is better positioned to start with this? Because I mean, if I compare it maybe to embedded finance as general, there's also some industries where there's a higher likeliness of maybe companies starting with it, maybe compared to other industries or companies. So I'm thinking, again, we have maybe said Starbucks is more the wallet 1.0, but are these like merchants that have a specific like brand value that customers identify with, or is the repeating buying behavior important? What would, like, if you had like 10 merchants in front of you, how would you select, like who would you pitch first? What would be your characteristic to say like these are more interesting for a wallet product right now, maybe compared to 5 or 10 years where a lot more would be doing it?
So the thing is that, Lars, nowadays we are always thinking merchants are selling something, and when they are selling to the transaction is done, and maybe
Yeah.
they are going to come back to like once again, like I don't know, 1 year later. And I'm seeing this as a trend in the questions that comes from some of the merchants. But the thing is that they're not selling only. They shouldn't see like they're only selling like food, or they're selling like some kind of physical product, right? At the end, the customer is theirs, and they have a connection to the customer. They can still create connection to those customers to use there, because now things are highly digital, right? Everyone has their app, they're touching to the customer. They can still, with these additional use cases, they can still touch their customer, providing this kind of additional capabilities, like use cases. They don't need to buy every and each time from the customer. From the app, they can buy something else, and still this would be bring revenue. Especially to come back to your question, we have lots of merchants who are providing digital content, who are providing goods that you buy, you subscribe once a year, and you are using their applications and services every day, right? This is a merchant, and the kind of merchant that merchant vault highly fits, because as a customer, let me give you the example of Blinkist from Germany, because I used to train my German skills before I moved to Germany with them, because they have some kind of like place my still a heart, and they're providing and they're charging customer in most of the cases once a year, but they shouldn't feel that they're not touching to the customer in between, right? The customers coming to the app maybe every day or like twice a week, then it means that potentially you can create lots of things there to just provide related services to customers, because customer is always there, and the merchant wallet should be there for like a convenience to be able to just collect some amounts, top up. They can top up the funds, and they can easily buy services or like additional maybe books or additional kind of like things inside. And this is a use case. So to make it short or like to the point, anyone providing subscription services is a highly potential fit for the merchant wallet.
Okay.
If they have an app, or if they have a touch to the customer.
Yeah. I haven't thought about that, but in the way you're describing it, I guess maybe specifically the example with Blinkist and books, there's a high connection.
There are thousands of them, Lars, thousands of them, different areas, different things. Even, for example, dating sites. Potentially, I mean, dating sites are like you're paying once a year or like once a month, right? Or weekly, you're paying, and you're using the services, but customers coming to your platform every day, maybe. They're spending their time fully. A lot can be done there. I mean, it doesn't need to be like a coffee that you buy every day. It doesn't need to be like a thing that you buy every day. People are thinking from like conventional mindset that, oh, I'm selling this thing for once a year, I don't need wallet. Because even I heard this one from big acquirers in my roundtable in MPA. They were saying customers coming once a month, it will not make sense. But it will make sense in, for example, they were saying, oh, in Delivery Heroes case for food. Because every day or like maybe twice or 3 times a week they're coming. It may no, I mean, it's related, highly related, like in Starbucks case, but customers coming to you just because they paid in advance and they're not paying for the 1 year time doesn't mean that they will not pay again. I mean, doesn't mean that you cannot sell anything again, right?
Yeah. And I like what you said, like in a way, I'll do the same comparison also to embedded finance. At the end, what really matters for any business is the access to the customer, right? I mean, obviously you have a USP in your existing product, and you should be focusing with most of your efforts on that. But that doesn't mean you can explore other revenue opportunities and make money in other ways, especially if they're so highly relevant for your core product as well. The customer access is more important than any of the other things.
I 100% agree. That's why the AI capabilities that I was referring in Wallet 2 would do the thing, even like we would be able to, I mean, in my next steps, I would be able to guide merchants what to sell and how to sell when it's not even in their core business to their own customer, to create convenience and to create this additional engagement.
But would you say there is a specific reason why this is such a hot topic, like right now, like in 2025? I mean, I think the numbers for like Starbucks customers saving funds with them, I think have been over like 1.5 billion since, I don't know, 2020 or something like this, maybe even more. So this has been like a wide success for them for quite some time. Do you see a specific reason why these Wallet 2.0s should be like, will be happening right now?
The main thing is tech readiness is now higher. And from the capabilities perspective, it's there. And there has been a kind of know-how that we just gathered so far in the last 5-6 years, especially because payment. If you check the payment markets, I mean, people thought first the payment market to be like back in time like cash, then cards came, right? And even
Yeah.
cards, most of the online merchants, I remember from my experience,
Yeah.
most of the online merchants were not able to get like acquiring like service like payment services easily from their acquirers back in the time.
Yeah.
Now there has been lots of changes there. There has been lots of penetration in the markets from a perspective that everyone has been acquired somehow. And now the thing is that I'm always telling payments are becoming like, especially card payments or like any alternative payment methods, things are becoming like more of like a commodity thing now. Even for that, I'm sure that card schemes are noticing this trend because they are being charged really in a high amount for on the payment. And then for loyalty and for other stuff, merchant needs to pay. Because of those margins are coming down, merchant starts to find, especially these days, ways to just cut some costs while they are creating some kind of value. And merchant wallets, that's why these days is a good timing to just sit fit to the problem solving equation now. That's one. And as I mentioned in the beginning, tech capabilities and tech readiness is another thing. Because like it not only tech, but there are lots of like guidance, lots of like knowledge that we can create, we can share with them, and this make them ready. And now because of the competition, of course, because of markets, right? Everyone's trying to acquire customers, all kind of merchants, and customers notice that there are different kinds of like value. They're coming from everywhere. To catch that customer, you need an additional loyalty and engagement, and that's why it answers the question because merchants definitely notice that customer is the core thing that they must keep, and they must engage their customer more to gain more. There has been lots of examples of this one globally, like for example, from Latin America, Rappi is a good example. From Asia, Grab is a good example that how they start from one core business and they converted to their apps and to their capabilities to like a super apps. Even like I'm seeing some kind of signs of Wallet 2.0 in those apps when I'm checking those. These are good examples. I mean, from everywhere, there's like a boom of information merchants, and they want to copy the similar stuff in line with their needs to bring more.
But would you say then also, because especially now you touched on companies also in the Asian region, are there like specific like countries or regions where Wallet 2.0 products are likely to face higher adoption? I mean, you said this with Grab already in Asia and Singapore. An example was a super app. I mean, super app tend to be more successful or often like more successful in Asia. What's your view on Wallet 2.0 for that?
So for 2.0, I mean, countries, especially developing countries, from a perspective, is always like ready to just innovate easily and to find their ways, find their workarounds. And for developed countries and more like structured countries, I'm calling like EU, for example, especially Western and like the central EU is like really regulated and really structured. The innovation comes really late to these countries because the thing is that in the countries, like for example in Asia, I can give some couple of examples for this one especially. Merchants are trying, or like customers are trying their own way, find their own way to just do the things, and then regulation somehow follows them, right? They are not just waiting for regulation. But in Europe, the people that, as far as I've seen so far, in the last 8 years, especially when I was living here, companies and people and like even the merchants, of course, because of the regulation, inclined to wait for regulation. First regulation should come, then we should do something. Like in one example that I was in MP as well, like a QR code payment, for example. So their QR code is like really convenient, and they, especially in Asia, in Latin American markets, they are using like really in a crazy and good manner without waiting anything in the regulation. They're doing and they're taking advantage of it, and they're just growing it. But when you come to just Europe, we are still discussing on like this wallet thing, and this identity wallet will come, when it will come, and how we can just implement. Of course, there are lots of efforts, but it should have been maybe quicker. There's different. So to answer your question, markets who are good on workarounds and not waiting for regulation are easy, quick adapters, and they are doing easy and quicker things, and they are able to grow quicker and faster.
Already you're talking to a lot of merchants and telling them about the benefits. And I think what you shared as well is the merchants are looking more into solutions like this. Maybe they're not knowing they're looking for like Wallet 2.0, but I guess what we heard now, some of them, when you explain them the benefits or the features of it, it kind of fits into what they're trying to achieve. If there's now a merchant, again, like Starbucks is a really extreme example. Again, it's Wallet 1.0, but still a massive company, a public company with a lot of resources. How could a merchant, let's say of like the smaller size, I'm not sure if an SME, but like let's say like much smaller size, without kind of like footprint in these activities, how can they actually like build these products? Like if you would give them some advice, how to get started to actually offering wallets to the customers.
There are companies who provide this kind of capabilities. And I will even personally now focusing on this area and creating this solution to provide this kind of merchant wallet to all infrastructure to the merchants. This is something that needs to be focused from a partnership perspective, from buying the service, maybe as a SaaS service or buying an on-prem service that they can use in order not to lose time. Because I'm seeing that these days, this is a time for boom of the merchant wallets. But if you want to do in-house, it's not a simple, like in Wallet 1.0, it's not a simple tech solution, tech layer. It's more of like an engine, and you need the vehicle for this one. It's more of like a different kind of like capability, and it requires lots of knowledge and guidance as well. That's why it's better to be like outsource this solution and to be able to provide quicker. It's like I'm giving sometimes to my friends the same example. Like we are coming with the idea of like creating a car, and we are saying that, oh, I will invent the wheel from scratch. I will just do the tires as well. No, man, like don't do it. It's like more than like 300 years old business. There's lots of like development. They're like providers. They're really good. You don't need to focus your energy or like give your time to there. So they shouldn't be on the trap of like doing, oh, we can do anything approach. And this will hurt, and they will be late in the market, definitely, and they will lose the customer.
Great.
So that's why working with providers, because it requires regulation as well, Lars. I mean, it's not something that you launch today and it works. There are lots of like regulatory issues, and when it grows, there will be additional regulatory pressure, and they should be ready for this. That's why they would need to get like a really professional guidance on this one from the companies. They are in the business. They can easily provide the solution, and they can build together on top of it. It always requires a customized solution as well for each merchant. It's not one thing that can fit all.
Fully agree. I mean, obviously, we spoke now a lot about the topic of wallets and how companies can use it and why they should be using it and all these things. I mentioned at the beginning as well, you spent a couple of years in the most recent history with Delivery Hero, focusing on some wallet initiatives as well. And now you left them most recently. You mentioned also now you are going all in, so to say. I mean, in a way, you were already all in at Delivery Hero, but now even taking a step further. And I guess that shows also in a way your personal conviction about this topic, that this is an opportunity for merchant. Or what made you actually do the step of building your own business around merchant wallets?
So I have around like 14 this year, like it's my 15 year in fintech, Lars. So with like new like generic concept of like X, I'm an X acquirer, X issuer, X APM, X PSP, X merchant. So from triangle perspective, if you think payments and fintech is a triangle, I have been
covered.
in all the areas, all covered, and I work globally. So I was launching, in my last role, I was launching different wallet solutions in more than 35 countries, not only user merchant wallets, also merchant wallets for riders to provide some additional financial help to the gig economy. Move to this area is that like there's a big potential there, and lots of value we can give to the customers. And I'm always thinking from merchants and customers perspective. Convenience for customers is the core thing, and convenience must be given to the customers, definitely. And this, whatever you call super apps or you call like merchant wallet 2.0, because at one point they will be somehow like matching and overlapping. This provides convenience to the users, and this convenience is something that we need in our lives to bring more value to the world and to other people as well. Because like when the convenience is there, we are able to save time. When we are able to save time, we are able to gain additional time to do something that matters for us, and for that purpose, see like a big value. Also, from a perspective that there are lots of services people provide, right? Because all of us has a different muscle power, and this muscle power can be capitalized with this kind of different use cases and can be shared or can be distributed to the world via these solutions easily. That's why another reason for me to be in the market, because like I'm always saying use cases that there should be the Wallet 2.0, and these use cases maybe provided by Lars, right? Lars is
Yeah.
providing embedded finance review, and he's providing, just an example, subscription package that users or his clients can get value. Assume that we are distributing Lars solution inside the wallet. I mean, not Lars wallet, but Starbucks wallet. Why
Yeah.
not?
Yeah.
Maybe
Yeah. Yeah.
Starbucks is not a good example. You can say yes, but
Yeah.
in Blinkist app,
Yeah.
or in like Headway app, or in booking.com, depending on your solution, it can be distributed, and this wallet will bring this to the ecosystem. That's why I see a big value.
So in a way, it's also, I'm not sure if the comparison is fair, but when you go on Amazon and you're on one product, it shows you all the other products that somehow like also the same people visit. So in a way, when I go to Blinklist and I use their service, and then maybe I see probably Blinklist would also show those services that are most relevant to their audience. So in a way, I can also see what other Blinklist users are using on top of Blinklist for completely other things. And this might be the referral engine built into this wallet.
Exactly. Referral engines are one of the items on top of AI. We have really complicated referral mechanisms we can create, and then Lars as a provider, as a creator, can make the income. User can even make some kind of additional income revenue from this one. A lot can be done. Referral is another business, definitely, but it's a part of.
Super interesting, Arda. Thank you so much for sharing your insights. We spoke about the whole like wallet thing for a couple of times. So glad you could join and share your expertise and experience. If there's anybody out there, maybe a merchant, but maybe also just a fintech or embedded finance professional who wants to reach out to you, what's a good way to get in touch with you?
Just they can easily reach out to me via LinkedIn, or you can reach out to you if you're in connection with you. You can directly share my own connection details. We can talk, we can have a discussion. We can just discuss, grab a coffee, chat on like what we can do, grow together, learn together, investigate and explore together. Why not?
I'll add your LinkedIn to the description of the podcast, and people can touch with you directly. Thank you so much. And yeah, maybe we record another podcast in maybe, I don't know, a couple of months, couple of years, and see how the adoption of wallets.
Definitely. I'm sure that we will speak more about, like, maybe we will have next Starbucks or Dunkin' Donuts or other companies who provides addiction. I'm sure that we will have more companies providing addiction to their services using a Wallet 2.0. We will be discussing more. Let's see.
Thanks for listening. For more content, please visit embeddedfinancereview.com. And by the way, I'm spending the next few weeks in India. If you know an interesting embedded finance company from here or anywhere else in the world that I should interview, please send them my way. Until next time.